today to join in on this session. I want to thank Jessica and 1776 for hosting the event. Hopefully you'll get some valuable information. I do want to warn you, however, that my cat is wandering around, so he likes the camera, so he may make a surprise appearance. So anyway, my name is Ann Fabry, as I said. I do represent two companies. One of the companies is MVM Associates, and we are kind of a headhunter for programs that are available through federal, state, and local government. We work across the country looking at incentives from individual states and helping our clients to secure those incentives. The other company that I work with in kind of collaboration with MVM is a company called Bowers R&D. And that company focuses solely on research and development incentives. So between the two companies, we pretty much have our hand in all the incentives that are available out there. So today's presentation is going to be a general presentation. I realize there are people from a variety of different states, so I'm not going to spend a lot of time on one state's incentives. So I'll try to touch on incentives from Pennsylvania, Maryland, Virginia, and the District of Columbia, because I was told that we would have attendance from each of those areas. If you do want more specific information about your company and some incentives that may apply to you specifically, you can always feel free to reach out. I will provide my contact information at the end of the presentation, and we can have a conversation about some opportunities that may exist for you. So I'm going to go ahead and share my presentation. So if you could give me 1 second. Okay, can everyone see that okay? I would hope so. You're on mute, so hopefully, Jessica, you can see it, right? So I'm going to assume everyone can see it? Mm-hmm. Okay. Okay. So, we all hear that, you know, there's money out there. There's money available. I hear this over and over again, but where is this money and how do I access it? And that's kind of what this conversation is going to be about. Now, we've all heard of the CARES Act and the Payroll Protection Program, and that's something that's in the news right now. But beyond that, when that program is long gone, there are other incentives that have been available in a variety of states and will continue to be available also at the federal level. So those are the programs that you need to consider going forward. And we find in our business that many businesses just miss out on these opportunities because they just don't know they're available and they have no clue that they're actually eligible. So we're going to talk about that today. The two types of incentives that we are going to cover today are primarily grants and tax credits. I will give you some examples of both. And, you know, this by no means covers all of the opportunities, but I'm going to highlight some of these opportunities in each of those areas that I mentioned. Okay, so when we talk about incentives, what are they good for? Well, basically they're there to support your business, to support growth, to reward you for economic development in a particular area. And a lot of these programs can do just the things that you see on the screen. They provide working capital, pay off debt, secure investments, hire and train employees, and expand your business. And there's other benefits as well. But some of them can be quite substantial, and some of them can really make the difference for your business, especially when you're trying to get it off the ground. Okay, so the first thing we're going to talk about is grants. And when I say grants, also some free programs that are available. They are there to help your business grow. And some of the, let me see, and here's some examples. Okay, so keep in mind that these are just some samples and the opportunities vary greatly by state. So I tried to pick out a program that's available in each of the states that are here today. So in Pennsylvania, for instance, there's something called the WEDNET program. And this provides, basically reimburses you for money that's spent on training. And they provide opportunities for both essential skills and advanced training. So in other words, you know, you can go have your employee learn Excel, which would just be a basic skill, or you can create a program that's specific to your business, and then you can get reimbursed for a portion of that. In DC, they have the Made in DC program, again, offering training, technical assistance, and networking. And that program is pretty broad. It offers a lot more than I put on here. So it's definitely something that you should look at if you're in DC. In Maryland, the Advanced Maryland program, again, focused on entrepreneurs. You'll find a lot of these grants do focus on young companies, helping small business grow. And Advanced Maryland is just such a business, such a program. So they focus on entrepreneurs. And then the Virginia Talent Accelerator program, customized training and recruitment. So the point here is that you really need to be aware of what's available in your state. Go onto your state's economic development organization website and take a look. See what they are offering you. Don't assume that the person, your accountant, and this is not a bashing in any way bashing accountants, but don't assume that the professionals that you're working with know about these programs, because they are usually covering broad areas and they are not always aware of programs that are there. And these things change as new administrations come into an area. A new governor may favor a certain type of program, and one program may go away and a new program may come into play. So you should check your economic development organization's website to make sure you know all of the grant opportunities and that you're taking advantage. I also note here the federal grant website. I can't tell you the number of companies that work with us that have benefited from federal grant opportunities. If you're doing something very unique, there may be some opportunities for you on that site. Take a look, see what they're looking for. Some of the applications are more detailed and more difficult than the state applications, but they can be worth it. I am aware of companies getting millions and millions of dollars, especially in the biotech, life science areas. But there are other opportunities as well, so I encourage you to check out that site. Okay, so that's just a sample of some grant programs that are available in those areas. And now we're going to talk about something that I work a great deal with, and that's tax credits. And when I first mention these, I sometimes get a blank look because people are not excited about tax credits, but that shouldn't be the case, and I'm going to explain why. So there are different types of tax credits. And the first type of tax credit that I'm going to discuss is something called a transferable or sellable tax credit. This is the type of credit that if you're a Pennsylvania company, and I don't know how many Pennsylvania businesses have, but they offer these credits through a variety of programs in the state of Pennsylvania, and they can be amazing if you qualify. Basically, what this means is if you are awarded a tax credit through a program that you've qualified for, and let's say you're a young business and you're not profitable yet, or you're an older established business that's also not profitable, and you just don't need a tax credit. It doesn't excite you, you don't need it. Well, depending on the program, the state of Pennsylvania allows you to sell those credits to people that do need them. Therefore, you're able to monetize the credit, and now you have additional capital for your business that does not need to be paid back. So this can then be a game changer. In the state of Pennsylvania, we have a lot of young tech companies, young companies that rely on these credits to build their business. I'm going to give you an example of a few of those, and then I'll move on. But first, let me explain that with the sellable tax credit, and you can use them a variety of ways. You can use the credit. If you do have a state liability, you can use it to pay that liability. You can carry it forward if you think you're going to be profitable, or you can sell it. So you have flexibility in the use of these credits. And let me say, they are not only in the state of Pennsylvania. They are in various states throughout the country. So that is another, opportunity that you should investigate if you're doing business in another state. It may be located in Maryland, for instance, but if you are also doing business in another state that has these credits, you should definitely be aware of them and make sure you're taking advantage. Back to the state of Pennsylvania, there's 3 specific credits that they have that allow you to sell and monetize them for cash. And I'm going to briefly talk about each of those. The first program is what's called the Keystone Innovation Zone Tax Credit. So this is for, as it says, tech, biotech, life science, or manufacturing businesses. So basically, if you're making something innovative, you're creating a product, you may be qualified. There are other restrictions. You have to be 8 years and under. You have to be located in a zone. There are 26 zones in the state, okay? As long as you're in that zone, you meet the criteria as far as the business, and you're under 8 years old. The only other criteria is a revenue criteria. They take a look at year-over-year revenues, and they give you 50% of your growth, up to $100,000 a year. So I can tell you that there are many businesses in Pennsylvania, young businesses, that are getting these substantial credits each year until they reach the age of 8. And it can be a game changer. It can pay for an employee, it can pay for your rent. So it's definitely something to keep in mind if you're a Pennsylvania business, or even if you're looking for a place to locate. These are options. I will say that 1776, each of their locations that are listed here are within the zones. So if you're a 1776 customer or client, you are already in the perfect place. And that's good to know, because I can't tell you how many times I meet a business that would be perfect, but they're just not in the right location. So if you are a 1770s client or thinking about becoming one, in Pennsylvania, these locations would fit the bill for this credit. Okay, another Pennsylvania credit is the Research and Development Tax Credit. Let me say that many states have research and development tax credits. They are not all equal. I will talk about some of those in the other states I mentioned. But in Pennsylvania, this credit basically gives you a percentage back of the money you've spent on Pennsylvania research and development. So if you hire a developer in PA, even if it's a contractor, or if you're located in Pennsylvania, you can get a portion of that money back. And it's 20% of eligible expenditures, and it is sellable for cash. So again, another sellable credit that can add additional capital to your business. In Pennsylvania as well, they have what's called the Video Game Production Tax Credit, which I think is kind of cool. And we're starting to see these pop up around the country. So if you are a video game producer, you can get a portion of the money that you've spent developing your video game back, 25% to be exact, back in the form of a sellable credit. And the nice thing about each of these credits is you can get all three in Pennsylvania. So if you are a video game producer that's spending money on development and you're in the zone for the other, you could potentially get money back for all three. So it can be very, very lucrative. So let me move on. Okay, so we just discussed, does anyone have any questions? I can actually take questions now if anyone would like to ask any Pennsylvania companies or.
We did have a question from Beverly in the chat at the beginning.
Okay.
She was wondering if the programs that are available are they based on where the company is incorporated or where the entrepreneur lives?
They're based on the address that is on the tax return that's filed. So if your address is at, for instance, a 1776 location, one of those that I mentioned, and you're paying your taxes, that's considered your business address, then you would be eligible. So it definitely goes by the address on the tax return in the state of Pennsylvania.
Okay, perfect.
Okay, any other questions? Okay. So let me move on to a different type of tax credit that you're going to find in the other states that I mentioned, Maryland, Virginia. And this is called a refundable tax credit. So in this case, as it says here, you get a tax credit, you qualify for a particular program, and then that sits in your account at the state. And then you pay your state tax with that credit, and whatever's left, the state will refund to you in the form of a check. So, for instance, you have a $10,000 credit, you owe $5,000 in taxes, you're going to get $5,000 back from the state because you didn't use it, and that's called a refundable tax credit. And you'll find those in other states. as well, beyond Maryland, beyond Virginia. That's another form of tax credit. So let's take a look at some of those. Okay, so this is a listing of some of the other incentives in DC, Maryland, and Virginia. And the first category is, I just have it listed as tax incentive. And that's because these opportunities do not offer a refundable or a sellable tax credit, but they do have some very nice tax incentives that you should be aware of. So we'll cover those. And then the other credits that are listed, they are actually refundable tax credits, and we'll go through those as well. Okay, so the first program that I'm going to talk about, the QHTC, is a DC Tech Incentive, and it's available for businesses that are involved in technology, including website design, software, and data processing. And so it is good for companies that are already in DC and companies that are going to locate to DC. And as you can see, the benefits can be very nice. They reduce your capital gains and franchise tax rates. And then there's other credits, relocation credits, and various other tax incentives. So if you are in DC and you're in a tech business, you should definitely be taking advantage of this opportunity. I put the DC website here. I would take a look at that, and there's a number if you want more information. Check with your accountant to make sure that they're taking advantage of this if you are in that category of business, because it sounds like it could be substantial. Obviously, if you don't owe a tax at this time, it's not something that you can take advantage of, but when you are profitable, it's something you should definitely look into. As far as the new hire and training credits, that might be something that you could take advantage of. So either way, this is something you should talk to your accountant about and make sure that if you can, you should take advantage of it. Okay, so moving on to Maryland. These are some research and development tax credits. In Maryland, they have tax credits for larger and smaller businesses, and it just depends on how much you're asking for, so to determine what your benefit will be. So as you can see, the basic R&D credit would be 3% of the eligible expenditures, and the growth credit would be 10%. Eligible expenditures, let me talk about what that means. Eligible expenditures basically piggyback off the federal definition, and they are generally expenditures related to wages, contractor expenses, and disposable supplies that are used in the development process. So for instance, your Box 1 W-2 wages would count for a development or research person. If you hire a contractor, a 1099 employee, well, they're not an employee, but a 1099 contractor anywhere in Maryland, that would be included. And any disposable applies, so the supplies, anything that can't be depreciated could be included. So if you are utilizing, the classic would be, test tubes or solvents or something like that. But if you're building something, you're building bicycles and you're utilizing parts and they're being discarded, those kinds of things would all be includable as long as it can't be depreciated. Again, these are refundable for small businesses, and they have to be utilized in the year that they are issued. So the state of Maryland, I listed here the website that you can check, the economic development website for Maryland, and check into this credit, make sure you're taking advantage of it if you fit the bill. I'm going to talk more about research and development in a little bit, but this is a basic overview of what they have in Maryland. Okay, moving on to Virginia. They also have their credits broken down in two different ways. One is the standard credit, and it is refundable, and we talked about that. So you would get a check back if you don't use the entire credit. That's for smaller companies. And then for the larger companies, they have a whole complicated, way of figuring out what you're eligible for. It's not refundable, but it can be carried forward. So if you get a $50,000 credit and you only need $10,000 of it in year one, you can use it over time, over 10 years until it's used up. And right now it's only good through January 22, 2022, meaning that the program is in place till January 2022. And they just have to vote on it to renew it. And they have done that in the past, so hopefully they will continue to do that. Again, the Virginia Economic Development website is listed here, and the phone number for more information. So talking about the research and development credit, the first thing I want to say is no matter where you're located, no matter what state, if you are making a product or a process, then you should be looking into research and development benefits, okay? Most states have them, and then there is this federal benefit that you can take advantage of for any money that's spent within the United States. So if you're a company building a product and you hire a developer in India, his expenditures will not be counted, but everything within the United States will be. So you can separate that out. So if you're in Maryland, but you're using a contractor in Pennsylvania, all of that's includable, okay? Again, what's includable as far as expenditures are wages, contractors, and disposable supplies. This program has been around a really long time, but it really wasn't exciting to businesses prior to 2016. And the reason was that if you didn't have a federal liability, you had a tax credit that just sat in your account. And although it's great when you're profitable, if you can't use it right away, it's just not something you want to spend your time on. So in 2016, they made a big change to this credit. And what they did was they tried to make it more useful to young businesses. And they added a component where if you're not profitable and you're not owing federal tax, you can utilize the credit to pay your FICA tax, employee payroll tax, within the first 5 years of producing revenues. Okay, so what that means is no matter when your company was founded, if you were founded in 2000, but you didn't start producing revenues till 2015, you can use this credit for 5 years, those first 5 years of revenue production, to pay your FICA tax, which is generally 6.2% of your payroll. It can really add up, and it's an immediate way to monetize it. And it's done through your payroll company. So as you pay your payroll each month, they run your payroll, your payroll costs versus the credit until it's used up. And then when you're profitable, you can still use the balance towards any any federal tax liability. And if you're a pass-through, you can pass it through to the shareholders. So there's lots of ways to utilize this credit now, even if you're a young company. And once you pass the 5-year threshold, it can only be used to pay federal tax. So it's generally, as it says here, 7 to 10% of your eligible expenditures. And the nice thing about this is you can apply every year and stockpile it. And it sits as a deferred tax asset on your books. It's great for trying to get financing. It's a positive if you're trying to be acquired. There's nothing negative about it. And obviously it can be used as you need it. It's not sellable and it's not refundable, but it can be carried forward for 20 years. So you have an awful lot of time to be able to use it. And there is some talk that they may make it sellable at some point. I don't know if that's true, but that would be great. The key feature of this is you must ask for it or apply for it when you file your federal tax return. There is a form that is included where you capture this and you take advantage of it. So if you've already filed your federal tax return, you can take advantage of the R&D in your state and file for federal next year. Or if it was substantial, let's say you really spent a lot of money on R&D in 2019, you can do an amended return. If you haven't filed, you can still ask for it with no issue. Does anyone have any questions about that? About the R&D credit or any other questions? Okay.
Oh, it looks like we do have one question.
Okay.
Let's see. Someone just raised their hand.
Yes, I don't know if you can hear me or not, but yes,
Yes.
it's Linda. Hi, I'm Linda Hubbard.
Hi, Linda. How are you?
I'm well. Thank you for asking. I
Yeah.
work for a nonprofit. Hi, Sam. I work for a nonprofit organization. Um,
Okay.
would we be eligible for that R&E tax credit as well?
No, unfortunately. The incentives that I'm talking about today are really for-profit entities, but there are incentives at the state level and at the federal level for nonprofits. I'm not, I don't have them listed here, but I would encourage you, as I said, to go to the economic development website and look and see what's available, because they do often have specific programs. But research and development at the state level and the federal level is for-profit entities.
All right, thank you.
You're welcome. Any other questions? Okay. I did want to touch on the research and development benefit and the CARES Act and how they're related. I'll do that quickly. Part of the CARES Act provides for a deferral of the employer's portion of Social Security tax, which is exactly the same tax that I just spoke about as far as the R&D credit. And the R&D credit is basically used to wipe out that liability. So some businesses have said to me, well, I don't care about the R&D credit right now because I'm going for the CARES Act. But the thing that you should be aware of is this. The CARES Act is allowing for a deferral of those taxes. It is not in any way saying that you do not have to pay them. You have more time in which to pay them, but you will still owe them. And I put the details here. I'm not going to read it to you, but it allows for you to defer them over several quarters. But at the end of the day, you will still pay those payroll taxes. And at that time, if you are eligible, you will be very happy, I would assume, to have a credit that could actually pay the taxes for you, so you don't have to take it out of pocket. So what we're saying in this case is absolutely go for the CARES Act. If you can apply for the payroll protection program to stop the bleeding, to keep your business up and running, please do. But these programs that I'm talking about will supplement that. And you by all means should take advantage of everything that you can get, and they will be around much past the CARES Act. So if you are a young company within 5 years of earning revenues and you think you may be eligible for R&D because you're making a product or creating a process, by all means take advantage of the R&D benefit. Have it sit there, and in 2020, when you have to pay that, or 2021, when you have to pay that payroll tax, it will be there for you. I did put a note here. I mean, this CARES Act, I think everyone knows it's pretty complicated, and I am not an expert on it, and I don't want to present myself that way. But I do know that if you choose to participate in the payroll protection portion of the CARES Act, you can't defer payroll taxes. So you have to figure it out, what works best for you. If you want to defer your payroll taxes, you talk to your payroll provider. There's a lot of different ways that this can be structured, but just keep in mind that the benefits that are available, these tax credits, will still be valuable to you ongoing. So don't assume they're not worth pursuing. A couple of things just that I've learned in this business. I knew nothing about any of these things until I started working in this business. But one thing I knew for sure, there are many, many, many companies that are missing out on incentives. And the reason is, they assume that if they were eligible, someone would have told them. I can tell you that's just not true. There are so many incentives, and they change with each new administration. Unless you're focused on them, you're just not going to be necessarily aware of all that's out there. So please don't assume that you're taking advantage of something, everything that you're eligible for. And don't assume you're not eligible for incentives. R&D is a great example. Research and development brings to mind test tubes and lab coats, but it's so much more than that. Research and development is anything that's being developed and tested. So if you're, if you're building, I have a laser company that gets research and development, food companies that have test kitchens. I mean, there's so many companies that are eligible for R&D that would never assume they are. And I can't tell you the number of times I've talked to a company and an accountant, for instance, had said, well, you're not eligible. And again, not to bash accountants. I have an accounting degree, so I love accountants. But again, they tend to be generalists. And this is a very specific area of expertise. So please don't assume that you're getting all of the benefits that you maybe do. And don't assume programs aren't worth your time. Some of the programs I mentioned today can give you $100,000 a year. These can be very substantial benefits. They are worth looking into. And if you don't have time to investigate them yourself, there are people out there like my company, but others too, that can help you. So here are my recommended action items. Please visit the economic development websites in your state so you can learn about what's available. Talk to your accountant or other professional to make sure that you're taking advantage. And I do want to make the offer that if you want to speak, and as I said at the beginning of the presentation, more specifically about your business, I could probably give you a quick idea of programs that you may be eligible for. So feel free to reach out. And here's my contact information. I'm happy to talk to you about these and other programs and answer any questions that you might have. So that's pretty much what I have, Jessica.
Thank you so much, Anne. We actually did have one more question that came up in the chat, and I think you touched base on this, but the question was, what role is typically responsible for staying on top of those tax credits and other funding opportunities? If you're running lean and we cannot count on the accountant, is there a category of consultants who can help us stay on top of these opportunities?
Okay, well, first let me say this. We work with some amazing accountants who are on top of things. So it's possible that your accountant is well versed in some of these and that you are already taking advantage of some of the programs. So it's just a matter of you following up to make sure. But it's also possible that the other is true. There are consultants who work with these types of programs. Our company does. There are other consultants across the country. It's, it's incentives management but it's not a real clear category. You really have to search them out. But there are people that will write the grant applications for you. There are people like us who will do the applications and do the reporting and meet the reporting requirements for you. And we also sell the tax credits. So we have a network of buyers who actually purchase these credits. So if you have a credit and you can't use it and you want to monetize it, we actually sell the credits across the country. So, there are various brokers that do that as well. It's just a matter of looking, but again, if you want to talk to me offline, I can try to give you some advice or steer you in the right direction.
All right, thank you so much, Anne. And I think that was all for the questions today. I have recorded the session, so I will send this out to all of the participants. I do have your emails from the registration on Eventbrite. And if you have any questions, you can reach out to me at jessica@1776.vc. But thank you so much, Anne. We really appreciated it. And that was some really great information, super helpful.
Oh, my pleasure. And good luck, everyone. Stay safe and healthy.
Thank you. Bye-bye.
Bye-bye.